Hello, welcome back. This is Seewing Yee, and today I'm going to share with you a presentation on landlords' profits from today's historic renters nation. All right, so without further ado, let me go ahead and share my screen and let's get this started. Historic renters nation, landlord profits. So if you are already a real estate investor, or if you're about to become one, right now is as great as any time to buy rental properties. And whenever there's a crisis, there's an opportunity. So you need to think contrarian. Whatever the general public or the mass media or the mass general public goes one direction, you as a smart real estate investor go the other direction. The principle of contrarian investing will build your wealth to achieve your real estate wealth over time. The way I've been investing in real estate for the past 20 years, and one blueprint I found to be true, regardless, is there's never a wrong time to invest. As long as you find the right team, as long as you find the right market, as long as you find the cash flow properties. You live off the cash flow as a blueprint, as a foundation, and all the other profit potentials and metrics will follow thereafter. And I will give you some very clear-cut example. Having said that, again, I also call it dollar cost averaging. If you're a serious investor, you need to consistently buy rental properties regardless of economic condition, recession, inflation, or whatever crisis, because real estate is that powerful. And people always need a place to live. And you, whether a potential landlord or if you're already a landlord, you have a place for a tenant, a renter to rent your property, and so you can benefit long term. All right. All right. So without further ado, let's go over the rest of my slideshows. And by the way, at the end of this presentation, if you see value of this video, please smash the like button and subscribe to my YouTube channel, and also subscribe to my website so you can become a free member of our real estate investment club. Okay, free member. All right. Anyway, let's get this started. And Lawrence Yun is the National Association of Realtor Chief Economist. He gave the audience a recap recently. 5 reasons the housing market is not about to crash, which is inventories are still very low, historical low. I will go over that. Builders didn't build quickly enough to meet the current demand of homes. Demographic trends are creating new buyers, and lending standards remain strict. And finally, foreclosure activity is muted, is at an all-time historic low. All right. And he said, we simply don't have enough inventory. Will some markets see a price decline? Yes. Some markets, yes. But with the supply not being there, the repeat about 30% price decline is highly unlikely. And I certainly agree with that. All right. Of course, let's take a big high level view of what happened in the past 10 years. The housing shortage crisis. The U.S. need to build 4.3 million more apartments and houses by 2035. We're talking in the next decade to meet the demand for renting housing. This includes 600,000 total units to recoup the shortage from underbuilding after the 2008 financial crisis. So let's talk about the renters nation. Rent growth is in a high inflation environment. Whenever there's high inflation, of course, we do have high inflation right now, the rental rates will increase. As you can see from 2020, ever since from the onset of the pandemic at the middle of 2020, especially in 2021 and part of 2022, there has been double and triple digit rental rates increases in many markets in the country, especially in the South and Southeast, such as Texas and Florida. So as you can see the trend, so high inflation will benefit the landlord because you have the ability to raise your rent. That is how it is. All right. So here are the data that clearly show right now we are still in a somewhat of a double-digit inflationary environment. And historically speaking, when you have high inflation, you as a landlord need to understand that the rent growth will occur. High inflation equal high rent growth. So for you, your cash flow going to increase over time moving forward, because even if the inflation gets lower in the next year to 2 years, you still should have a continuing rent rates growth when your tenants rent from your properties. All right. So that's a very good sign. And I want to take another step back as well, that over time, you as a real estate investor need to invest over time, at least 7-10 years or more. You can sort of write out the appreciation. Okay. So historically speaking, real estate always increase in value over time, regardless of what we're going through in this current somewhat of a correction situation that we're experiencing in the past 9 months or so. Slight volatility and correction we are happening, but if you have a mindset and a discipline to invest for the long term, invest over time, per this increasing curve, ever since 1965, we're talking for the past 57 years over time, with the exception of the economic crisis, a real estate crash back in 2008, with the exception of the few years in this period. If you look at any other periods of time in the past 50 something years, real estate value has always gone up consistently year over year. All right. That's your journey. Again, renters are renting longer. So these days, because there's so many renters, I know you do a long-term lease, 1 year annual renewable lease. This is the typical benchmark for investors. When you get tenants into your property, you're going to feel very good that because there are so many renters out there, they are willing to rent your house for longer. So that's a good thing because it'll reduce vacancies and it'll reduce turnovers. And so your return, your cash flow return will be very good over time, and also shows all the various cities on this chart that shows annual income changes that means you want to rate from. All right, in the various markets. Okay, and so that tells you that most people, the income level, are unable to support in the cities where these people live at. If the income level is too low for them to buy a house based on their salary or based on the home prices in these various locations. And a lot of these people, they have to stay on the rental pool so they can rent for you. So again, these are recent studies. Fortune has done some studies stating that the Americans have had a sudden change of heart about buying a house, and only 1 in 5 think it's a good idea to buy a house. So therefore, 40% of people think it's a good idea, but however, 80% of people think it's not a good idea to buy, so they rather rent. Might as well rent from you once you become a landlord. All right. So landlord will profit, as I said, landlord dash real estate investor. Only 21% of US adults believe now is a good time to buy a house, which is the lowest level in many decades, according to the Gallup poll. The median home price has reached around $436,000 compared to $329K pre-pandemic, making ownership increasingly unaffordable. That's why there are so many renters are knocking down the door to pay to rent your house. So there's a lot of bidding wars by renters try to rent a limited amount of homes out there throughout the country, especially throughout the good areas of the country, fast growing areas of countries like the South and Southeast of the US. And how is the inventory? As you can see, there's a very little Modern inventory available for sale. Right now, they are around year to date. So we're talking the middle. We're about to conclude the second quarter of the year, and there are 50% less homes to buy compared to the pre-pandemic level. The low inventory homes is affecting a lot of housing transactions. So low housing inventory as a result of many homeowners locked in at their historical low 3% they have, and they're not willing to move up to buy another home, having to deal with the 7% mortgage rate, essentially doubling their mortgage payment if they were to give up their current low rate mortgage. So they are staying put, they're locked in effect. Meanwhile, according to Alto's research, as you can see, the single family home rental has increased pretty consistently over the past few years. And in many metros in US, the average monthly rent is have exceeded $2,000. That's what's happening. Uncertain economic outlook, keeping where they are, that is pushing cap rates. Cap rates means the higher the rent, the higher the cap rate when you analyze particular real estate property to buy as a rental. So in times of economic uncertainty, people tend to stay put, and so therefore they would rather lease a single family home or apartment, whatever, until their individual's economic situations gets better. All right. So, and so what else? And also Redfin weekly housing market data. I use this data quite often. We have seen, although this black line is 2022, we have seen the first half of 2022, we have seen explosive double-digit appreciation growth nationwide. And then the second half of last year, due to the skyrocketing of the mortgage rate from 3 to 4 to 5% into the 7%, the demand have subsided in the second half of 2022. Demand have subsided. And then some areas of the country, especially in the Western region, the home prices have decreased 10 to 15% and so forth. But having said that, many areas of the country, like the Midwest and the South and Southeast, even during 2022, their housing market in their local area have not decreased at all, really. In some markets, many markets, the housing markets are appreciated in value. So real estate is local. There's no such thing as national real estate market because there are thousands of cities and thousands of counties located in the US. So real estate is hyper local. All right. And then as we are, even though the latter part of 2022 have seen some recent downturn depending on what market. However, at the beginning of 2023, as you can see this blue line, the year 2023, because of historic low supply of inventory and still pent up demand, even though the mortgage rates are throughout this year, 2023 has been around 6 to 7%. We have seen increasing prices because economics 101, because pent-up demand are still very elevated. There's still a lot of qualified buyers out there, and they are bidding for a limited amount of supply of homes available, therefore causing upward pressures on home prices. As you can see, from around February of 2023 this year, we have seen gradual increases of median sales price all through the nation, to a point where we have seen almost around, on the average, again, nationally, I hate to use the word national as a market, there's no such thing. But anyway, I say anyway, we have seen almost a 10% appreciation from February until June of 2023, and the trends have continued to go up. So therefore, any kind of a slight reduction of the home prices that occur the latter part of last year have been more than made up by the corresponding offsetting high appreciation market. So therefore, becoming, in my opinion, a balanced market, slowly becoming a healthy real estate market. And I hope so. That's my hope. And then, of course, the supply of inventory is very limited. According to this Brisbane article right here, a website, dated May 28, 2023, there's a 10.7 weeks of supply divided by 4 weeks per month. We only have 2.7 months of inventory. So the healthy market, a balanced market, is around 5 to 6 months of inventory. And we only had 2.7 months of inventory nationwide. So therefore, and the trends are getting lower and lower as long as the mortgage rate will stay around the mid sixes to the high six. We expect to see the supply of inventory to gradually decrease from the current 2.7 month of inventory, supply inventory, as stated on the Brisbane website. Just keep that in mind. All right. So let's continue with this slideshow and the next. So, and then of course, everything is mortgage rate driven. And right now, as we speak, right now, today is the 5th of June, 2023. And according to Mortgage News Daily, who track mortgage rates on a daily basis, today's rate for people with good credit is around 6.91% on a 30-year fixed rate mortgage, give or take. And so even with this relatively high mortgage rate, there are still there's still more potential buyers than there are available limited supply of home inventory out there. All right. Right. Now let's go over let's go over the potential action plan. So my recommendation is if you want to buy Cashflow properties, it's around, you put 25% down payment. So the question you have to ask yourself, before I'll go over the specifics, the ideal situation is for you to put 25% down payment at the applicable mortgage rates to take the financing. Your expectation is that you're going to have a positive cash flow on your property. So much cash flow per month, that is subject to analysis based on a particular situation. But suffice to say, you pick a market that have a low entry point, low entry level home prices, and match that against the rent. We call it rent to value ratio. We call it capitalization rate. We call it cap rate, capitalization rate. We call it also rent to value ratio. I don't want to bore you with capital cash returns, are also very important, but these numerical formulas. I will learn more about it when you access my YouTube channel. We'll have a whole video about that. But suffice to say, kind of property you should buy right now is in the Midwest or in the South and Southeast. But I'm not going to go over these numbers that much. Even on this price in the Midwest, around $67,000 to single family home, it rents very well. All the numbers make sense. Even with 7.5% mortgage rate for 25% down payment, your expectation is that you're going to have a little bit of monthly net cash flow. So you need to have a new expectation because cash flow is very challenging these days. Not like old days. Okay. This is the new game you have to play. This is the new normal. As a real estate investor, all you can hope for, at least the beginning, or at least the first year projection, all you need is a little bit of positive cash flow. That's foundation. That is your foundation. The rest will take care of itself. Okay. So hopefully that makes sense to you. Right. So these kind of Midwest properties is a good opportunity to buy. It's a low down payment, low price point, very good rent to value ratio, and very good cash flow. Again, don't focus. A lot of your newbies are thinking, oh, I need more cash flow. The reality is right now, you have to deal with the skyrocketing appreciation of homes in the past few years. And because of that, the rent needs time to catch up. So their cash flow, you have to set a lower expectation. The cash flow is not as high as before, 5, 6, 7, 8, 9 years ago. If you bought rental property back then your cash flow was much higher in terms of cash and cash return. But again, as I said, we are playing in the new game these days, and you have to understand the reality. You have to reset expectation accordingly, especially for experienced real estate landlord and investors. That that's what you have to do with. All right. So don't have any expectation higher than this. Like, okay. And these properties are this 16 or so properties are it's a turnkey properties in Alabama, some in Tennessee. So this is what I call a hybrid market. A hybrid market whereby it's not as volatile as in other markets such as the California or the western region of the US. We have seen a lot of volatility, is a sort of a cyclical market. And this is not a tertiary market either, whereby it is not a cash flow, low price market such as the one in the Midwest. In Alabama and Tennessee, this is a hybrid model, hybrid investment market, meaning the expectation for the foreseeable future is such that you're getting pretty decent cash flow, decent cash return of 6, 7, 8%. And you'll also expect some consistent appreciation of 3 to 5% moving forward. I know no one have a crystal ball, but potentially buy those currently is under radar, those markets such as here in Alabama, throughout Alabama and Tennessee, these type of homes, these type of turnkey properties, which has already been rehabbed, tenants placed, the returns are very good, relatively speaking, and the rent to value ratio is very ideal. We took over too much detail, and the price point is very nice. We're talking prices, low 100s, as you can see, 114, 121, 122, so far and so on. These properties are completely rehabbed. It's a very good rental market. You're potentially working with a very reputable turnkey provider that does everything for you, property management, the whole 9 yards. They manage your property from out of state, from remote site unseen turnkey type of investment model. So this price point, the purchase price relative to the rent we're collecting is all indicated here. So these numbers are very, very ideal. The rent to value ratio is around 0.07% to 0.08%. So purchase price multiplied by 0.08%. This case equals a monthly gross rent of around $995. At the end of the day, this type of metrics, purchase price versus the gross monthly rent, if you put 25% down payment, even with a higher mortgage rate for investor, 7.5%, whatever, you will achieve positive monthly cash flow after all the debt service and expenses deductions. Does that make sense? I'm just showing the first 8 property of turnkey, completely rehab, ready property, ready to go, tenants in place, and similar to the next 8 properties located in various parts of Alabama. They are good neighborhood. They are in the B minus to B class neighborhood. So decent tenants. So buying and hold in this type of hybrid housing market, invest for the long term and buy more than one of this property, or however you want to buy, you can afford it. Invest for the long term, and you will see this type of property will earn you multiple streams of returns and yields, which I will touch on a little bit more. And if you want to buy newer construction properties in the South and Southeast and Florida or Texas, for example, if you're able to buy a new construction, you can negotiate for a mortgage rate buy down to a very good rate. So right now is a perfect time to pull the trigger, because sometimes some builders are flat out giving you a very good 30-year fixed rate mortgage of 5%, even though today's mortgage rate environment is already close to 7%. This is a no-brainer. Take advantage of the select builders that have this kind of mortgage rate buy down to benefit you as a real estate investor. So your cash flow will be much higher with 5% 30-year fixed rate mortgage as opposed to paying 7.5% in today's housing environment like you normally would as a risk investor. Having said that, as you can see, I'm not going to go over the numbers. This single family home in Florida, 269K, rents for $2,300 with a 5% mortgage rate deduction of incentive by the new builder. Then the monthly net cash flow could be a whopping $571, which is amazing return and cash on cash return if you can find this kind of deals. And of course, our network have this type of opportunities for our capital investors. And again, another property, new construction, new build, very reasonable price in Florida, 325K, for example. The rent for 2,400. Again, 5% mortgage rate will give you a higher cash flow than normal. Monthly net cash flow 423. So very great rates, great cash flow, even in today's current economic environment. Now, some of you are thinking, oh, I'm going to wait until the mortgage rate comes down before I buy. I'm going to wait until I get some discount, I get some good value. Maybe I'll pay 20 or 30% discount. You ain't going to get that. Right now, you're, you have low competition from other investors. However, when and if the mortgage rate falls to 6% or lower, the feeding frenzy will occur, and we can go back to some bidding wars and multiple offers that we have seen in the past few years. So not want to wait and having subject yourself to compete with so many buyers when mortgage rate comes down. What you should do now is buy now, especially you have a great incentive, buy down the rate or get a straight flat out 5% mortgage program without any costing money out of pocket to get a rate buy down. This is a great opportunity to take advantage of some of the great incentives from certain builders that are giving you this 5% mortgage rate, which is mind boggling. Again, the most important reason why you should buy any kind of rental property is because income property, especially single family homes and up to 4 units in market, at least my recommendation, is that rental property is history's most powerful and proven attractive, historically attractive, multi-dimensional asset class. It's the world's greatest building investment vehicle. Why? Because unlike other asset classes, you have 4 ways you can make money. One is cash flow and passive income, increasing cash flow. Like I mentioned earlier, based on inflationary environment, you can command even more rent down the road. So if your budget cash flow right now is low, don't sweat it, because it'll systematically get higher over time. You can get a lot of tax benefits, long-term appreciation, equity growth, and using the power of a loan, 30-year fixed rate mortgage, power of leverage, OPM other people's money. So that's the power of the rental property. And also, by the way, you can also, you read it on your own, why income property, rental property, multi-dimensional asset class. There are more benefits, as you can see right here. You can do you can negotiate the house down the road. As you can see here, you can work the house to many different ways to earn money, what have you. And most of all, whatever your mortgage rate right now, doesn't matter. If your mortgage rate is 7.5%, you get on your rental property, or 5%, whatever, always renegotiate down the road, such as refinance your mortgage rate when the rates go even lower, so you get better cash flow. Meanwhile, you continue to earn a lot of multiple layers of benefits, as I stated to you a bit earlier. Warren Buffett, the great legendary investor, Mr. Warren Buffett says, be fearful when others are greedy, and be greedy when others are fearful. So the recap: buy real estate, buy rental properties, and wait instead of wait to buy real estate property. Because if you wait, you're trying to time the market. You cannot time the market like that. So just get in the game and experience all the multiple layers of benefit, as I just saying to you. Because keep on waiting for the perfect time to buy. How do you know we're at the bottom of the market? We might be at the bottom of the market right now, for all we know, right? And I've shown you all kind of data. So for you to wait to buy is a fool's goal. Okay. You need to buy real estate and wait, not wait to buy real estate, because even because the rental market is very strong, you know that there are multiple tenants that are knocking down your door to rent your place. So getting a high quality tenant that will stay over time, pay your rent, make you wealthy, the tenants that is. So you just ride the wave, ride the economic wave, ride the housing market wave, and invest for the long term. Let your renter pay down the loan. Let The renter make you lean, make you rich, and increase your rent over time. And yeah, so there's no reason that a lot of people want to wait because they waiting for the housing crash, which is not going to happen. As I clearly stated to you, based on my indisputable data, I show you on this presentation. So at the end of the day, overcome fear and take action and be greedy when others are fearful. A lot of people are very fearful out there. You need to be courageous and you need to take action and you will get the reward down the road to increase wealth for yourself and your family and to achieve your definition of financial freedom. So before I let you go, hopefully you'll receive a lot of value from this presentation. If you have, please smash the like button and subscribe to my YouTube channel because I need to educate more people on this great, very transparent, very accurate data, what have you. Furthermore, one more thing I'm going to ask of you is for you to visit our website below and drop email into the form to subscribe to my weekly turnkey real estate investment newsletter. So you become a free member of our real estate investment club, if you will. And every week, once you join our free network, you will receive a lot of great weekly educational contents similar to what you just received on today's presentation. And so you can keep on learning about how to become a real estate investor. And our goal is to help investors invest out of stake. This is our specialty. Regardless of where we live, we connect you with a network of experienced real estate agents, each specific markets. We have some great reputable turnkey provider that we have worked with over many years that will provide turnkey rehab, tenant-ready properties, very good neighborhoods, very good locations, so you can make money over time to create a lot of wealth in cash flowing properties in the best markets in the country, in the South and Southeast, and the Midwest. All right, thank you so much.